Okay, guys, good morning to all of you. Can you hear me loud and clear? If yes, give me a thumbs up. Okay, thank you very much, guys. Good morning to all of you. Okay, it's been a while. We do the MAO once again. Recently, have been very busy with the preparation for my 18 intake, which is happening tomorrow. All right, so for you guys, if you really want to join me and hear me out for this year in terms of in person, then you should really join our TWB 18 intake. All right, contact us through Facebook if you are really interested because tomorrow will be the class. Okay. All right, so that is the first announcement. The second thing now I'll share that my crazy app is coming up, and I cannot deny that I'm getting very excited over it. All right, so people have been asking me when will it be fully functional, and I already mentioned that it will likely be fully functional for Android by October. Now in August we already have the prototype and we've been testing it out and doing using the APK file to try, and it's pretty decent. Okay, I mean there's still room to improve, but I'm quite sure we are getting there. Then, of course, for the iOS, then it will likely be in December because iOS, as you know, there's a lot of requirement, a lot of red tapes to handle. That's the main reason. Okay. All right. So thanks again, guys, for all the concern. All right. So today, let's go for our MAO right now. Okay, let's go. Okay, so some people who have wrote to me and said that care about you moving on to do YouTube, right? So why not you basically teleport this MAO to YouTube site? Now, because first of all, YouTube site there is a few good reason. Because first of all, Facebook itself, right? I mean, there's a lot of interesting what they call restriction when whatever we share. Okay, so that's why for this YouTube site is much better for me. Okay, and second thing is that right, of course, in YouTube itself we do have a chance of being monetizing the YouTube channel, and of course for YouTube site I'll be doing shorter video, lesser time. Okay, so you can actually watch it with ease, and of course. More important, the Facebook page that we have right now, we will convert it more for other purposes. So that's the reason why I'm moving this so-called MAO into the YouTube form in a shorter video. Okay, so that's a reason for that. Now, today is the 19th of August, Friday. All right, morning to you once again. Now, FOMO stands for fear of missing out, or is it the time to stay out? Now, I can answer you this, okay, because I have both camps coming to me and asking me, Cal, we have missed the entire bull run recently. So should we chase right now? Versus people telling me, hey, Cal, we have missed the whole run now. Should we just stay out? So I just want to conclude here. My personal opinion is stay out. Yes, my personal opinion is stay out. Now, why do I say that? Now, because if you actually notice some of the YouTubers and some people who went on YouTube to do this sharing, right, about 2 months ago, almost everyone, the trainers around me or the YouTubers around me are all calling for sell, right? But the market has went up. And the thing is this, at this stage right now, where the market has rebounded about 10% from the low, I realize that now the wind is changing. In fact, now, right, more YouTubers, more trainers are calling that, okay, the bear is over. The bear is over. So let's time to buy into the market. Now, I don't know what to say at this junction here because I said this multiple times, right? When a market fundamentally is good, right? If you are calling for short and the price will go higher because you are on the wrong side. But when the market fundamental is bad, and when we have a rebound of 10% example, it's not because the market is good, but it's because in always a bear market, there's always this violent recovery or violent rallies. All right. So I'm just gonna stay here first to tell you that as long as I don't see the fundamental change, to me it's all right. This rally is just a part of the bear market. And I've been telling people this. So I say that, look, if you miss the buy up, just wait for your turn. Either you're going to wait for a turn to short, or just stay it out again until the market pull back down again. And then from the bottom, if you think that the market is good for buying, then you buy from the bottom. But at this stage right now, if you chase in to buy at this stage right now, at this particular level, then I'm going to tell you, you're going to live with regret. Because why? Let's say we do a hypothesis here. Now, let's say if this is a bull market, and you buy at the RSI, it's at 75 and 80, I mean, naturally, there'll be profit taking, right? So the price will pull back later on. So by buying right now, it doesn't make any sense, okay? Now, let's say this is a bear market, okay? It's a bear market, actually. Then, of course, at buying at 70%, then what will happen? The market, if it goes down, it will break the lower low, and that will be a big, big problem. So with all these things at the same time, it's all right. It doesn't make sense for any form of traders to be looking to buy right now, okay? So that's my view. But of course, again, it's really up to you as an individual to make your own decision, okay? It's really up to you to make your own decision, yeah? So point about that, okay? All right, so just so you can see, I purposely found two traders' face. One guy, obviously, 588 is a bull trader, so that's why he's very happy. And the 464 likely is a bear trader and he's not happy. So you can see, right, even though you are, it depends on which side which camp are you in. As long as you're on the wrong side itself, naturally, emotionally, you will be happy. Okay. All right, let's continue. And this is what I want to share with you this morning. All right, disclaimer applies as usual. Once again, I'd like to thank Ames for supporting us all the way. Thank you for all the support that given to us. All right, I'm very happy that, things is moving right now back to normal again. So that is a good thing for all of us. Okay. Okay. And of course, we are looking forward that we will get things ASAP and then things start moving again. All right. Now this is the FOMO joke. All right. This is why there's one thing we won't miss. Okay. Now, in FOMO, right, you think about this, in any time you are involved in anything, when you do an FOMO decision, you definitely know that what usually happens next. Like doing a business example, you see that everybody is selling chicken rice example. Then after you feel that, oh, okay, the profit margin for chicken rice looks good. And then you just jump in. When everybody is doing that, then naturally what will happen next as well? Of course, then everybody go in, the supply increase and demand, which solitary is still the same, then will be split and saturated. So you also notice that, right, during the bull market back last year as well, right, we have many trainers sprouting up. But of course, now the market has subsided a little bit, right? You also see that some trainers come and go. So that is the reason why I say fear of missing out is never a good thing. All right, that's my view. But of course, again, I can be totally wrong. Now, one thing I can know for sure is, all right, maybe this had to change slightly later, yeah? Okay, now this is whereby I was doing my this MAO, right? And that was like probably when was that? On the 13th of August. Yeah, on 13th of August. Okay. Now at that point itself, right? Look at my number of people watching my MAO. So it went down all the way to 65. Now, usually by this time at this point here itself, it's like 80 to 90, right? But imagine at 65, so it's a brand new low. Why? Besides that, when a market is basically very complacent, or when a market really that thinks that, hey, I don't need to listen anymore, I know what to do, that is usually the point. All right, so this is usually the point. So that is why I was telling people this. Okay, want to know whether the market is bullish or bearish, right? Watch Kel's MAO. If the numbers is heavy, all right, big numbers there, then it's going to be very clear. That means that the market is very scared. And that will be the best time to buy in the market. But you see that lesser and lesser people, right? Okay, lesser people involved in listening to my MAO, right? Okay, then that is whereby you should consider to watch out. Okay, all right. So FICO says that buy the dip. Yeah, that's why I say that if let's say it's a bull market, then you just buy the dip, right? So it's to chase at this stage right now. It doesn't make sense. If you want to buy the dip, it's absolutely fine because there's nothing wrong or right here. Okay, all right. So this is what I'm trying to say. So again, you guys, you make your own decision, yeah? Okay. Now, definitely for the fear and greed index, we are now trading at 54 right now. We were 55 about a couple of days ago. So what does it mean? Well, basically, it's all right in a very neutral position. And that's the reason why now you can see the market kind of like soft, yeah? Not really moving. You notice that? Very like neither here or there. I was just looking through some of the Telegram forums and they were like calling for buy on this, buy on that. But those buys are all the penny counters. And yeah, in terms of percentage itself is pretty lucrative. But in terms of the money they win and lose, right, I realize that they still lose more than they make. So why is that so? Because when you buy big on penny counter, when you do make substantially, but when you lose, right, it's also quite a fair bit. And I noticed, as usual, penny counter, they get rotated around. Hence, therefore, if you play contra, then you have a problem. So that's the reason why I felt that for us to sell, right, we just had to go slow, yeah? So this is the current situation right now. And over the last 2 years, you can see very clearly that we are still okay. When we look at this, okay, look at this right now. When it's above 54, example, or 655, then this is whereby usually you still got the further upside. Can you see that? Okay, but once it hits 55 and then pulls back, then you should be a bit worried. And that's the reason why I felt that, right, that this chunk here, there's no need to jump in right now. No need to do a FOMO right now. Okay, that's my personal view right here. Okay, so you have to make your own decision. Now, let's take a look at this week itself, the entire week of the economic figures. Okay, let's go. Now, first of all, we have a very, what you call, well forecast building permit, so nothing have changed over here. So this is just going to be neutral. Okay, now the retail sales was good. Now the retail sales was down from the previous month, so 0.9%. And very incredibly, they were looking at the number to be a minus sign, but obviously it came out 0.4, so there's a positive sign. Then, of course, we have the inventories. Now, the inventories was very surprisingly cut to by 7 million barrels. So, by right itself, that should push the crude oil price higher by a bit. Because why? Now, the previous one, it was a positive and they were looking at a slight negative. But when the number came out, right, it was like, wow, my goodness, more than 20 times more, right? So, this is something very credible. Now, we did see the FOMC meeting minutes. It's very clear that the Federal Reserve is going to continue to combat inflation, but they also say that, right, the numbers of the rate hike figure will be really dependent on the figures, and because of that, the market kind of like it. Now, the initial jobless claim was at 252,000, and they were looking at a higher number, but of course, the number came lower, so it became a positive sign. But the point is, this is still 250,000. All right, the Philadelphia Manufacturing Index itself, right, previously was minus 12.3. They're looking at minus 5.0, but wow, the number came much better, almost one time. So again, it seems that, right, hey, the economy is doing well. What? Okay, fair enough. I'll leave it there. All right. So all I can tell you this: this month is the data seemingly well massaged because why? We have the non-farm payroll at 500,000. We have the unemployment data getting better and better in a way, but still at the 250,000 range. And now we have this manufacturing indicator showing that it's better than expected by such a fair bit as well. So all these things tells me that, okay, it looks good. Honestly, it looks good. All right, so next week itself, right, we do have the new home sales again, and then we have core durable goods. Okay, this one will give you the fair gauge of the market. And of course, we have pending home sales. Now, pending home sales, right, I suspect the number will be lower. I'll talk about this later in alternate market views. And of course, we do expect the minus 0.9, this GDP to be the same. Now, those Atlanta, this survey says that it should be a minus 1.3 to 1.5. But of course, if the market will come out with something different, because you can see some positiveness on the last few weeks, and who knows? All right, and of course the PCE, the data that this Federal Reserve won. Now the previous was 0.6. This time around, it's expected to be lower. Now this is naturally because CPI data can come down already. So of course the PCE data will likely be lower also. So in short itself, right, next week is more like favoring buy again. Who knows? We have 6 weeks of upside. This is all possible, but just that I just feel uncomfortable to chase right now. So this is my view, and we'll see how it goes later. Okay. All right. Now this is the what happened last night, this morning. S&P 500 and Nasdaq ends Thursday slightly higher as summer rally struggles. Okay, why we say struggle? So of course the market resurrect because why? On Wednesday the market came down by about 100 over points on Wednesday, 170 points to be precise. But then again, they rebounded. Okay, so S&P 500, Nasdaq, Dow Jones all recovered a bit. Okay, they were down initially, but they recovered towards the end. Now, of course, we have this very incredible run on the Bath and Body Works. Now, apparently, right, we know that the big investor came in and bought a lot of the share at $15 and the options, the call options. And of course, after that, they sold off. So they made about $800 million. That's a lot of money. Yeah. Okay. All right. Then we have the initial jobless claim, and of course we know that we have a Wednesday drop but Thursday rebound, and of course the central bank said that they're committed to fight inflation, but it says that now we can look to pace the tightening, right, because of the current market condition right now. So they're saying that, okay, maybe after we have a better expected CPI, then the PCE data, all better, maybe they can just go down. But I will say this again and again, that all this thing itself is at the high level where you're saying this right now. It means that the data are still at a very high level and the market itself is still at a mid-draft. So by saying this, are you telling me that the market will rebound all the way to the new high? Or are you telling me that this is going to be a starting point of a sell-off? So again, this is an individual thing. I will leave it to you to decide. I have my own view. I shared this earlier. Right. Let's go for a quick global news update now. A quick one. Oops, sorry. Now, first of all, remember I told you guys about ETH, right? I think ETH is a better one compared to buying Bitcoin. And truth be told now, this ETH now is trading 100% higher when it was low. The low was about 900, now it's 1,008. So that's how you get your 100% gain, okay? So why is that so? Because I told you before that Ethereum has more utility. The utilization itself is higher and they have an upgrade called merge. So all this is to basically have its value, okay? And you can see that now, right? People saying that, okay, the crypto winter now is different from the last. You always hear this from people. So I'm going to leave it there. But all I can tell you this is that now Ethereum is doing pretty okay. Now, this is the Turkey now. Basically, what happened that their inflation is at 80%, but they still go and cut rate. Then this is really crazy. Yeah, but of course, there might be some reason. The reason for doing that, I believe, is to stimulate economy, yeah, because if not, there's a problem here as well. But of course, some people say that this is a very idiotic move. It only create the inflation go through the roof. So again, there's always two ways to look at it. So all I can say is pretty sad over there right now. Now, China is having heat wave and is knocking out quite a fair bit, yeah? So this heat wave, right, has some serious impact on its economy. Why is that so, right? Let me explain this to you. Because when you have this heat wave, right, people will not be able to work or go to work, or they will not be really get involved for all those constructions and all the other things. So when all these things are down and stuff, right, undeniable, right, you have to balance it, because as a but of course, you say, how can we balance the Mother Earth, right? Yeah, I understand that, but maybe you can play around with your numbers or what you do so that you won't be under the heat that badly. Yep. All right, last but not least, you can see that this is the US Federal Reserve balance sheet. Okay, not too bad. As of 17th of August, it did went down a little bit to $8.849 billion. Alright, the previous one was 8.879. So you can see that there's a little drop, about $30 billion. Okay, about $30 billion. But is it anywhere near enough? No, because as you can see in the history, you can see that this is really nothing else. This recovery here was at minus. It's this 7 billion, and of course it went all the way up itself, all the way to this point here itself, to about 9 billion. So what we have here is from 7 billion to here 9 billion. That means that the 2 billion money coming that came in and pushed the market all the way. Yep. So unless the whole thing changed, like what you saw back in 2018, that every time it's a staggered downwards itself, right? All you can see is that your portfolio getting smaller and smaller and smaller. I was there and I know that feeling. So that's why when the market is not doing this, I say that, look, I don't need to chase right now. Yeah, I don't need to chase right now. Okay, right. We have all the news already. So what's going to happen next? So let's give me a minute to get some water for myself. Okay. Now let's look at some alternate market news for today. Let's take a look. Now, as I told you before, right, UK inflation is really, really crazy. Now it's at 10.1%. Its food prices hit 40 years high. Now this is updated by Yahoo Finance UK. So it's not like I made it up, okay? This is serious and this is really happening right now. And of course, you can see that, you can see this. Now, this is the McDonald's customers complaining that the burger is shrinking. Now, of course, I've been saying this for longest of time. This is not like your slider. This is really the size of McDonald's burger. Oh my goodness. You know, when I was having my McMuffin meal like about last week, so I see the size of the burger itself is really pathetic. Okay, so it's really happening. It's going to happen continuously. That means the price may not change because it will actually create problem, right, for McDonald's because it's supposed to be a fast food center and they are selling on the cheap side in a way. But if they continue doing this, their profit margin will reduce, right? So what they do is very smart. They just have to string the burger by a bit, by bit, by bit, and they can increase their profit margin. Pretty simple, right? Now, of course, in Singapore, you should notice that, right, some of the places that you go also, you must watch it out. Now, this is a point whereby economic noodles at KK Hospital, Kopitiam. Now, I mean, people, all parents, if your children was born there, you will know that that particular food court is damn expensive. I mean, seriously, yes, it's expensive. So for some luncheon meat, for some nuggets, and I think one fillet, it costs her $7.50, and she make a full heart out of this. But I'll be honest with you, come on, man. This is food court level. What do you expect? You are paying for the aircon also, right? So, okay. Then, of course, it got a bit called crazy. This is another economic rice, but this is like one chicken, a few fish balls. Then I think this is one egg. And we have this vegetable with tofu. Well, it costs $12.90 at this Rasapura in MBS. Wait a minute, MBS. Like, what do you expect? Sometimes I mean, what do you expect, guys? MBS, right? Marina Bay Sand. My goodness, look at the place itself. Look at you can expect the rental is ridiculous, right? So how can you say it's cheap? So if you want to go to places like this and after be unhappy, of course, it's very stupid, in my opinion. But of course, again, undeniable. The prices itself in Singapore, you can really feel it right now, right? Can you feel it right now, guys? There are 51 of you. Do you really feel that the prices itself in Singapore is really going up? You can feel that the food prices is really going up, and you feel that, oh my god, just 1 year difference itself, right? You can really feel it. Now, how many of you feel it? So if you feel it, so let me know by keying the word feel. Okay. Feel the inflation in prices. Let me know if you feel that it's all right. Let me feel. Put a feel. Let me know. Okay, I want to see you guys telling about how you feel about this right now. All right. Also, Allison feel it. Karine also feel it, right? Leslie also feel it, right? Yes, indeed. I was just going to I had my duck noodle yesterday with Susan. Right, it's really the hawker, those kopitiam. So we ordered noodle plus, duck noodle, but I said that add more meat, right? The meat was just a couple more pieces, and it's $8 already. Oh my god! I said $8 for what do you call roasted duck noodle with some additional meat, $8. Oh gosh, really? This is really happening, guys. So you must make some money for yourself, guys. You not you will feel the pinch, and of course you can say, okay, then I eat lesser, lor. Then what's the point of living then? Okay, so guys, this is the thing here. So, but again, that's the reason why maybe Michael Burry really feel the inflation itself. That's why he sold off 95% of all his counters. It's a shocker, you see. Michael Burry, Scion Asset Management, right? I mean, this should be the only portfolio that he has. Oh my God, it's $100 over million asset company, but now only left $3.3 million. Oh my God. He has sold off 90%, 95% of all his shares, meaning in short, like almost everything except one. And why? That's a good reason why he's doing that. In case you forget who is Michael Burry, this is the guy, okay? This is Michael Burry in his office. I think, wow, you can see that he's really a very eccentric guy, yeah? Okay. Anyway, he has been calling and reminding people that be careful, that the market itself, this retracement is not real, and he feel that, right, this is just a recovery from a bear market, and again, things will just happen again. So he said that in 1930, it happened before, 1938, 1946, 1950, year 2000, and year 2021. So in short, he is reminding. And of course, you can see that in this, right? You can see he said that now this recovery is just part of it. Now, wait a minute. Hey, wait a minute. We have this contrary, right? Someone recently says, all right, this market itself, whenever the market recovers from the bottom and all the way 50%, right, the market will never come down again. Then why is this Michael Burry say that it is not? In fact, there will be some more selling. Okay, you must understand. Michael Burry is talking about NASDAQ. The article that I mentioned for you is talking about is S&P 500. This is the article from CNBC, okay? Sam from CFRA says that history reminds us that S&P 500 never set a lower low in any post-World War II bear market after recovering 50% of that peak to trough decline. Okay, you got to understand the point. So what I'm trying to say is this, okay? If the market is going up and then from the highest point, it dropped down, okay, dropped down to the 20th percent mark, which is what we call as a bear territory. And then if the market recover more than 50% of the drop, usually the market will go up according to what this guy say from CFRA. That means that once the market hit the bottom from a bear territory and recover and go past 50%, usually it's higher level. Now, that is true for the S&P 500 because it comes together with the Dow Jones, but it doesn't apply on the NASDAQ. So that is how you see right now. We have a problem here. Which one are you looking at? So that's the reason why there's some bull and bear arguing on this thing here itself, because they don't understand that we're looking at it from different underlying altogether. Susan says that, right, coffee shop prices now feel like restaurant prices. Exactly itself. Yeah, Susan, exactly. So, but we can see very clearly that the existing home sales now we are back down to 2020 level. That was during the pandemic time. So the existing home sales has come off quite a fair bit. And the best part of this is that despite we have all the good part of the economy, right, the last few months you can see the market has been down. So again and again and again, why is this all happening right now when the thing is we're supposed to be doing well? So again, to me, unless I see a real recovery in the market, if not, it's not right. I just kind of feel that this is just really not the time yet. At least this is how I see it for myself. I don't know about you, but at least this is what I see it. Okay, so I want to do this again as usual. All right, there are 51 of you right online right now. You can see that. So I mean, the last number was 65, now 51. So you can see that now the numbers are already coming down. So that means that, right, the market is very bullish, or at least they're very what do you call, pretty optimistic, or at least complacent. That's the word if you're looking at. Okay, all right. Okay, so the thing is this. Now we all know that the Federal Reserve previous month they actually increased their balance sheet, right? That was what happened the previous month, and of course this week itself they reduced it by a little bit. The question is, why is they doing that itself, right? Because they really know that the current situation now doesn't warrant them to do anything immediately right now. Now, one market that I'm very, very concerned is actually the China market. I'm very concerned. To me, it's all right. This China market, I covered this about 2 months ago regarding about the 3 months ago, I covered about the Evergrande. Then after that, about 1 month ago, I covered on the potential of people not doing and not paying for their home. Now, it's very normal, right? If you go to this show house, I mean, this property, this show house, and then after that, you see your property that you like, and then you can buy your property, and of course, you pay your first 10-20% deposit, and then usually what happens is, all right, then the developer take this money and they go and take on a bank loan, and then after that, they go into the property. But because of Evergrande, this problem, right, more and more property developer realize that, right, it's better to just, don't build the house and declare bankrupt. It's much easier because of all these problems right now. So what happened is this, the property home sales has dropped and dropped and dropped. Oh my God, look at it. This is really insanity. Look at this right now, everybody. Take a look. The number since here has already dropped since July. Since July, July last year, the number has came down a fair bit already. And of course, this number continued to fall, and it's now at the 50th percentage level on average. Now, this is really no good at all, because this tells you that if China, one big company, country cannot survive through then I can tell you this, things will get even worse as time goes by. This is really, really insane. Okay, so that's China property versus home sales. Now this is not the end, there's more to go. All right, now there are more than 300 over developments has basically decided to do these mortgage boycotts. That means that now, right, there are widespread of this people don't want to pay because they know that if they pay, means as a buyer of the units, they realize that even they pay, the money will be taken by the developer and they will not do the units because of whatever reason, and then they just run. And because of that, it's right, why would I want to pay in right now? Because there's no guarantee. And of course, you can see it's crazy because why? Look at it. People are getting very, very, very upset, okay, with this ongoing right now. And you can see that it's a bang run, because people are looking at this and say, what is happening right now? It's a bang run because people are very worried of their money. And of course, this is not only that, it got worse. The China GDP for the last 22 years, okay, 22 years or 21 years has been going up all the way, right? But incredibly, even during the post-pandemic, wow, the recovery was even fantastic. It was post-pandemic, right, of 2021, and the GDP number went up. But now we have a problem. The number is actually coming down. So why is that so? So obviously, you should know why, right? Imagine that. Okay, so this is really scary for China to tell you this right now. You know, in China they are very full of themselves. They know that they shouldn't be doing all this, but this is really crazy. Okay, 1 minute, let's move that mouse over. All right, now you can see all home buyers with outstanding mortgage loans will stop paying. Oh my God, it's actually more like they organize this. Unless construction resume before October 20th. That means that now the problem is this: the developers doesn't really want to begin work because first of all, the raw materials is very expensive. Okay, the number of employees to do all these things is much lesser because they ask for higher pay. So think about this: if I sell you a unit for let's say $1 million US, and then I know that my costing itself is about let's say $500,000, I know my profit margin is going to be good. But the problem is now, if all the inflation going right now, logistic issue, and blah, 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 then your costing itself is, let's say, 800,000. Then, of course, you say, let's still some profit. Yeah, but don't forget, I need to take this money to pay to my shareholders, my investors, the banks. So by the time if I do all these things itself, right, then it doesn't make sense. Then I'm working for free. So that is the mindset of the developers. They rather wait for a while, let the price comes down a little bit. Then, of course, the material will be using lesser. The people will feel that, okay, I need to go back to work. Then they'll be good, but how can it be in near term? So that's the reason why the home buyers decided to come together and say, okay, you know what, let's stop paying. So now the thing is they're boycotting this manifesto. Now within 4 weeks itself, right, more than 320 projects in about 100 cities were facing similar protests. So what happened was there's a template going on right now, literally a word template, which actually really writes, and write about the current situation right now and why shouldn't they pay and stuff. It's a template and to send to the developer. And once this template was out, right, oh my God, the entire China picked it up, and then everybody followed the same template and whack the developers in their different cities. Oh gosh. And because of that, right, it's become a big problem right now. Okay, so this is what is happening right now in the market, and that's the reason why people are really, really worried about what's going on. Okay, they're very worried about what's going on. Okay, I just realized that okay, someone just texted me, how come today Susan didn't post the MAO link up? Well, the MAO link, we don't need to really post out every time now, yeah? Because the thing is this, the main idea is that for you guys to remember that there's MAO whenever we post it, and of course you're supposed to like the page, and then of course when that all happen, you should just click when it will notify you on its own. So you don't need to really always depend on us to send it to you, okay? Okay, everyone should know where it is right now. So now this is the China 70 city home prices. These are the major city. Oh gosh, look at it. This is really, really bad. This is really, really bad. Okay, this is 2022 and the city home prices are all coming down. And was that any worried? But isn't that good? Home prices coming down, would that be good? Well, it's good for the people who stay in it, but it's going to have a repercussion. I give you why. That's so give example. When the home prices in their city is going down, right? First of all, the rich will say, okay, what's going on? Okay, I'm not going to buy. Okay. Now the so-called not so rich will say, okay, it's a good deal, I come in. But when your estate itself, right, the prices goes down, all your surrounding, all the estate price will go down. And when all these things happen, right, the bank will come in and tell you, oh, you know what? Your price goes down, right? So that means your valuation itself is low, hence, therefore, you need to top up. So that is a problem. And when people need to top up, right, it's going to be very scary and painful because it's like in thousands and tens of thousands of dollars. Okay? So China real estate versus the GDP. Now, apparently, China real estate, right, actually holds about 30% of the entire China GDP. So obviously itself, right, if China real estate price is coming down or there's too much people inside there, but there's nothing much to make, right, then I can tell you, China GDP will go down further. Okay, that is the problem here. So, all right, that is a problem here. And of course, you can see right now, right, the thing is this, in a deep slump, all right, combined sales of the top 100 developer half in the first 4 months of this year compared to the last. So now the thing is this, even the loan growth is going down at a very crazy speed because people are still very unhappy with what they're doing now. So undeniable, right, many 400,000 citizens are not able to access their saving because right now they may complain. So the bank, in order to just shut them off, they just had to just stop the access. Why you do that? There's a lot of reasons, but main thing is this, definitely itself, when you make too much noise, they need to take the iron hand or iron fist to do things here. So now I understand why am I very concerned of China market, and I think that China market must watch out because it can really go down quite a fair bit once you get to see this happening, right? So of course, that will come to the end of this part 1 of the MAO. Look at the numbers now. We have 60 people right now, so it's really incredible. I'm not shocked with the number because it's always like that. And I feel that it's a very good indicator. So when the numbers are low, then just concentrate on selling more because of that, the market will come back again when things get better. Okay, so let's just look at this chart right now for today. Let's take a look right now. Now this is China A50. Okay, let's take a look at China A50. Now you can see very clearly this moving average MA30, the weighted moving average, is damn powerful. If it stays below it, it's a sell. If it stays above it, it's a buy. We all understand that. So with this understanding now, you can look at it. Why is it not moving? Because it's actually cornering the market very well. All right, so I already tell you this. The current situation now is very clear. The market now is trading below MA20 and MA30 and MA200, 200, yeah. This is MA200. This is WMA, okay. And this is like the 30-day MA. Okay, so you can see very clearly that the market couldn't go any higher right now. It's stopped by the moving average perfectly. So if the market if the indicator is so good as well, right, which is part of it, then of course, naturally, if the market push up, we can see it going up again to 14,008 level. But of course, now it's at 13,668. So from where we are right now versus to what the level is still a distance. So let's just work hard toward it itself, right? Okay, so that is China for you. Let's look at the US market. Now, the US market today, interesting. The US market today is a doji directional day. It's a doji directional day. All right, so what happened is this. Now, today, the opening price is at 34,014, and the opening price today, this is the opening price, sorry, this 34,014 opening price, and 4, and the MLP is 34,010. So that means that if the market goes below MLP, that should be selling. So today, as long as market is below OP and below MLP, all right, then there will be selling. look out for pivot 2. 33,878 is a pivot 2 level. Watch out for that. The last few days, the market seemingly know where the support is and the market rebound. So 33,878, let the market come back down first. And if it breaks this number, do expect to see some profit taking. Of course, there's a very nice number here as well. On average, it's for 33,000. Okay, around there. And let's see how it goes. Usually, when the market is stacked, right, the market will go towards it. Okay, let's look at the Nasdaq right now. The Nasdaq is slightly lower than yesterday. Okay, so the Nasdaq now with the KSI red, so that means the market is more towards the sell side, and of course the market, right, is now trading below, all right, MLP, and trading below this so-called, by doing this right now, right, 13,500 is the level, and now we're 13,481, so which means the market now is below MLP already. So below OP, below MLP is meant for selling, and of course, if the market do continue to go down, we do expect to come all the way to P2 or 13,318. All right, that is what I see if you would ask me for the long-term view. But for the short-term view itself, right, if the market really calls for it, then you should be watching it very closely. Okay, so that is the Nasdaq. Let's look at the S&P 500. Now, I share you the S&P 500 chart already. And the thing is, this S&P 500 chart, the first thing is look at the KSI, and then first look at where the opening price is. All right, where's the opening price again? The opening price is 42.85. Right, 42.85. That is the opening price. And now it's trading below MLP 42.81. So that means that it's actually, incorrect, right? But based on this stuff. So the thing is this, if the market goes below MLP at 42.81, the first target you'll be going is 42.45. 42.45. Okay. So my view is this the same. There's a stack here right now, and we all know that usually a stack in the chart, the market will usually be drawn like a magnet towards it. So this is something to watch out. But because the KSI is green in color, right, you don't expect that come down by one stamp down unless something really bad happened. Okay, so 42, 45 will be the level that I'm watching if the S&P 500 continues slide. Now Nikkei is down today. Now Nikkei has been going up very strongly because of the weaker dollar. And now for today is potentially, if we continue to go further, it could potentially become a BMB. All right, that means that if the market really continue to go down and break this point here, so then the BMB is confirmed. Okay, now of course that's where it is. Okay, so the market now, the opening price for the Nikkei is opening price 29,089, and MLP is 29,055. So if the market OP is here, MLP is here, divide by 2. I mean, the OP versus MLP, right? The market now is trading below the OP mark, right, and MLP. So what do you expect to happen? Yeah, sell. Of course, you expect the market to sell. And you can see that it actually got rejected at pivot 1, and now it's aiming for pivot 2. So let me just bring it down closer to you, take a look. Okay, moment. Yes. Okay, can you see on the chart right now? You can see this is a Nikkei and a star and bomb at the same time. We draw 2 lines, as simple as that. If the market stays below the line, then it's a sell. And truth be told, the market went down all the way. Okay, but until KTR -2, perfectly sell drawn by not by us, the market just know where to stop, and it stopped there brilliantly, and it rebounded. This is how incredible our TWB system is. And of course now, by look at it, it seems that the Nikkei is still going to go down, right? So if the Nikkei really goes down, watch out for this. It could be a BMB when it goes below 11. Okay, it goes below here itself at, let me just double check the numbers here. Moment. Okay, 18th of August, I mean 2 days ago, if the market breaks the low, and the low is actually 28. Wait, okay, if the market really breaks the low at 28,843, 28, 843 on the Nikkei. Then we will have a BMB, and that could lead to potentially more pullback down all the way to MA30. Yep. Okay. Thanks, Susan, for sharing that. So I think my screen jammed up for a while. Okay, how about Hang Seng? Now, this is the one that I'm very, very, very concerned. Now, look at the Hang Seng chart, everybody. Now, Hang Seng back then was doing pretty decent. It was at June itself. There was a base out, and then it went up, right? Then that was where I got very concerned, because when the price was going up, look at it, entirely my KSI all the way was red in color. All the way was red in color. So that was a very concerning factor, because why? Traditional indicators will tell you it's a buy, but my indicator actually calls for a sell instead. So as the price was going up, right, you will say, hey, Cal, your indicator is spoiled already. But look carefully what happened. The market went lower than where the low was. So that speaks for itself that the indicator know what it's trying to say, but as long as the market is not ready to show you, right, then you just have to leave it first, but you have to be reminded about this problem here. And of course, truth be told, right now, we're having the same problem right now, that we have a KSI red, but the market is still coming down. Of course, now we have a KSI green now, so maybe this one have to double check, all right, and see whether is the market going to go up now from here, because who knows if the market thinks that, hey, you know what, nothing to be worried about, who knows, the buying will really come. Okay, all right, let's look at DAX. Okay, but sorry, Hang Seng. So Hang Seng, right, if it basically recovers, the first thing first is our MLP is 19,805, and today Hang Seng opening price 19,679. So once it goes above OP of the day and MLP, usually it will go much higher. And that's the reason why I like this OP MLP rule. Very simple, very easy to trade. All right. So this is the Hang Seng, and of course you have your DAX. Okay, so for DAX, right, we can see a bit of choppiness. We have the KSI that is red in color, and then after that now we have this yesterday's market. Now yesterday the market really tried to test the pivot one, but once it failed, then it came down. So of course, if you look at it in the 5-minute chart, right, of yesterday, it'll be easier to understand. Take a look right now. Can see? Okay. Now what do you see over here? The market came down first and the bomb was there. So you put two lines, and of course, once the market goes above it, it's a buy. Then subsequently, it's all right. It basically pulled out again and went all the way up. And this time around got itself resisted. Now take a look here. There's a CCYR. All right. So this OP was here, MLP was here. So the market was above OP but did not go above MLP. So that's the reason why the market don't have strength and start to pull back down again. So of course, on average itself, right, you can see that, you know, doesn't really gel that well. All right. Okay. Got it? So that is yesterday DAX. So moving forward to today, now for me, it's all right. The KSI on the DAX is still red. So I suspect that it will come back down to here at 13,525. And maybe consider to be part of this MAO. All right. Okay, watch out for this 13,525 on the DAX. Yeah? If it comes down, let's watch out for that. Okay, so let's look at crude oil price right now. Now, crude oil price is still going down, and I've been telling people around me and say, don't buy crude oil yet. Don't buy. Now, look at this trend line that I just shown you yesterday, right? You can see that the market really, your friend, really, the crude oil tried to go up yesterday, but failed. So now the thing is very clear, very simple, right? I'm going to be upfront at you, all right? All right, why are you buying into this crude oil right now? Okay, because for typical, right, I think that no one will want to buy crude oil right now unless they say, oh, this is a breakout method, it's good to buy, because the market trend is still very, very strong. All right, now to me, it's all right. It's basically telling me right now for crude oil, if it goes back into the channel again, that should be, or trend line, there'll be more downside to go. But if you really stay strong and stay above the trend line, we just hope that we give him a chance at 914, right, for upside itself. But again, as long as the market refuse to let the refuse to let them the crude oil going up too fast, so they don't want Russia to benefit, then of course to bring it downwards, it makes a lot of sense. Okay. All right, so we are done with this. Now let's look at our lovely goal right now. Just a moment. There we go. Okay, so for gold prices coming down at 1753.80. Now, 2 weeks ago, I already tell you gold don't touch. 1800 is a sell. I already said that to you already. And I said to you, so the downside itself could be 1744. Remember? All right, so in short, all right, today's a DJDD. The market, if it goes below OP, it's a sell already. Below OP is a sell. No matter how it is, it's always a sell unless it trips you on the stocks. Because it means that you didn't take strongly, or basically it's right, this thing got more downside to go. Now to me, gold is now trading below the MA30 and below MLP. So that means this guy to come down to pivot to at 1747. The chance of it happening is very, very high unless, you know, you're not a lookout, right? So 1747 will be the technical level that I think this gold will go down. Okay, let's see whether right. Okay, so watch out for this. With the DJDD, it's always that you must hold it all the way to the end of the day to actually see the full impact. Okay, all right. So that is the oil gold prices. Then of course we have silver. Now silver is coming down, and I told you 1930 will be the price I prefer to buy, and it's coming down. So if let's say really gold and silver pull back down this tonight, then we actually have seen our money. All right, I mean there'll be a buy here at 1930. Okay, very, very nearby already. Very, very nearby. All right, now of course, if you're gonna buy more gold and silver, you can wait for the gold to hit 1744 first, then we can look to buy. Yep. Okay. Now this is the Ethereum chart right now. Really, this Ethereum chart, you can see that it really from 1008, I mean so-called the smaller number, from here itself, right, which is about this 9,000, and then all the way wearing. Okay, so now let's look at this Ethereum right now. Ethereum, you can see very bullish. Why? Because you see when it's CCRY, if you see the next bar, it's actually a single yellow. You know that this guy will likely do more things for you. Okay. So basically now for the Ethereum, it's coming off a little bit. All right, 1678 will be a level for you to look for buy. 1678, but do note the MA200 MLP, okay, and the AIMSUN, okay, over here. MLP 1986.2, and this we have here itself is 1792 for Ethereum. I think that most likely the market is going to go down to touch this 1792 level. Now, Bitcoin has come off already. I told you before, 24,000 is a very strong resistance on Bitcoin. And I've been saying this and been saying this and been saying this. And I keep on saying that, right? If Bitcoin, the KSI turn red, all right, and blue bars to come out, right, it's a time to sell. And when if it sell down, then the S&P 500 will also follow through. And truth be told, down is coming down. So I believe that 21,907 will be traded later this week. Of course, today is Friday, but don't forget Bitcoin itself can trade on Saturday, Sunday. So I kind of believe that, right, there will be downside all the way down to 21,907 on the Bitcoin. All right, I'm pretty confident on this. And I've also been telling you this for the US market itself. If S&P 500, I mean, if you put this Bitcoin and S&P 500 side by side, right? Usually you will see the close pattern of the S&P 500 and the Bitcoin. They work in tandem. Let me just show you live before we end this session. They have a quick one. Now the thing is this, I already tell you, don't chase. But if you want, I cannot stop you. Yeah, I can't. Okay. So let's take a quick look before we end this session today. And again, today is a new low. It's 50 people online right now. So you can expect that really, either that I'm really boring you because the market know what to do. But of course, based on what I have been seeing on a regular basis, we all know that that is because you probably miss out on this point. You can take a look right now, everybody. You can see that the S&P 500 is moving up very nicely. Beautiful, right? but the volume itself is declining at a very incredible speed. That is not the same. Usually itself, right, you have only, when the market is going well, everybody participates, so the volume stay up or stay down. And again, I said, right, it's not the first day, right? This is quite true. And the thing is this, if you compare right now, everybody, you can see that the Bitcoin is coming off, but the S&P is going up. So we have seen this before many times when the market, right, is down for S&P, you have seen some, what do you call, something happen here, whereby you can see the Bitcoin also come off, right? So with the Bitcoin coming off right now, S&P has a very incredible way of relationship. And usually the Bitcoin will move first on the downside, then the S&P follow. Okay? So all of this tells me that most likely we're going to see if it's going to drop down for the Bitcoin back to 21,000 example, then of course by right we will see the S&P dropping down to 4,200. Okay, so if Bitcoin goes down, this is Bitcoin, yeah, this is BTC, and this is S&P. All right, so very clear. If the market actually for the Bitcoin coming down, okay, the S&P 500 will be affected. Okay, all right. So that is my view here as well. Hopefully you have enjoyed this session once again. Now, when will we convert to the YouTube site? It'll be from September. All right. So that means next week I'll still have my MAO as usual. All right. Thank you very much once again, guys, for holding until now. Okay, we have hit new low for this time round, but it's okay. But I say again, you should know that this is a good sign. Okay, so watch what I said. When people are not online itself, that means they are complacent or they are really feeling the heat or they are really gave up. This is a time to be involved in the market. Okay, take care. Have a great day. This is Kel signing off. Bye bye.